Are you a fan of traveling and flying? Would you like to have your devices more nimble, more powerful, and even faster than what you have today? As an investor, can you profit from these two industries? Hi, my name is John, and today I'm going to talk about a company that is involved in these two very interesting industries, rapidly growing industries. I'm talking about none other than SAM Engineering. During the recent weeks, they've just concluded their AGM, and I'm going to talk about interesting numbers that have come out. They hit more than 1 billion in revenue, and they're also taking steps to further a pivotal plan that they started in 2010. And I'm going to talk about the future prospects of this company and where they're going probably 5 or 10 years from today. As an important disclaimer, I do own SAM Engineering, and please seek a licensed financial advisor if you do want help in making financial decisions or investment decisions. I'm not licensed to give those financial advice. So speak to a licensed advisor if you do need advice. Also, as a further clarification, this video in no whatsoever way is a buy or sell recommendation. It is purely for educational purposes only, and whatever I'm sharing is my personal opinion about how I look at this particular company as a business. So what is SAMI? I know it rhymes with Mami, but I don't think they're very closely related, none at all. SAMI just stands for SAM Engineering and Equipment Malaysia Berhad. That's why SAMI as an abbreviation. For the financial year end 2022, in which they just had their AGM, they hit 1.15 billion in terms of revenue. That's Malaysian ringgit, by the way. Their workforce today currently stands at about 1,600 people, and it consists of mainly two main divisions. One is SAM Equipment, in which they actually manufacture highly engineered products for the semiconductor industry. And the other division is SAM Aerospace, where they manufacture precision parts for aircrafts around the world, right? This is the glimpse of their aerospace products. They manufacture nacelles, which forms part of the cover for an engine, and they also manufacture engine cases as well. Three main hubs, Malaysia, Thailand, and Singapore. And I will go a little bit into more detail about their Thailand plant at the end of the video, because that's where their biggest expansion is going to be. But it forms part of their aerospace products in their aerospace division. Oh yeah, more importantly, they serve two of the largest aircraft manufacturers in the world. I guess you guys are smart enough to figure it out, Airbus and Boeing. Probably a third competitor that would come close to these two aircraft guys would be someone like Bombardier or Embraer, which they also serve, right? So a bulk of all the aircraft manufacturers in the world, they do serve them. For the equipment business, subdivided into two parts: semiconductor front end and back end, storage devices as well. They do serve people like Micron, who manufacture solid state drives, and also hard drive manufacturers, people like Western Digital, people like Seagate and all that. By and large, even if they don't serve them directly, they serve for equipment manufacturers that serve these industries. Their revenue growth has been nothing short but outstanding, considering the fact that these two industries they serve in, aviation as well as semiconductor, has been very cyclical and very volatile. In 2007, when they were previously known as LKT Manufacturing, they were mainly serving the semiconductor back end. I'll share more later in the later part of the video how they transformed the business. But from 2007, I think even on their slides, there's a slight typo. It's not 2027, it's 2007 to 2022. They had a CAGR growth, or compounding annual rate growth of revenue of 14%, right? In the financial year end 2022, they hit a record revenue of 1.14 billion, highly commendable. I think if it was not because of COVID, they would have hit that numbers earlier. And considering the very cyclical nature of the industry, as you guys all know, aviation was badly hit by the COVID pandemic. So, Sam Engineering embarked on a transformative journey way back in 2010, early 2010, or even earlier if you want to consider when they took over LKT Engineering. So, in LKT's case, way back in 2007, a bulk of their revenue actually came from what we call back end semiconductor. So, the guys who were the EMS manufacturers, the guy who were in the OSAT the games, yeah, these were the contribution to LKT's revenue. 73% from back end, 25% from data storage, and a very small chunk, 2% from other precision parts that they manufacture for their clients. Now, fast forward to 2015, a huge chunk of their revenue actually came from the aerospace division, and they started this journey way back in 2010. I'm going to talk about it a little bit more later. And they embarked on also a journey into the front end semiconductor industry, and you can see the results. Contributed 15% to the revenue, and back end semicon was reduced so much so to about 11% only. Now, fast forward again to 2020. As you can see, only 48% came from aerospace and 22% came from front-end semicon. Now, why is this important is you have to realize that both the aviation as well as the semiconductor, whether back-end or front-end, are actually very cyclical and very volatile industries. Prior to the pandemic, prior to 2021, a lot of people shun the electronics industry because it was so volatile and cyclical, because it was very driven by consumer electronics demand. However, the pandemic has actually fast forward a lot of digital transformation for a lot of companies, cloud storage, content creation, IoT, Internet of Things, industrial Internet of Things, and even automotive electronic solutions. And therefore, you have seen semiconductor industry as a whole has accelerated. It's just brought forward, what growth that it was supposed to organically grow over the past 3 years was just accelerated because of COVID. And Sam, being very cognizant about it, they needed to diversify both their revenues from aeronautical as well as semiconductor, and that's why they did not want to have such a big concentration in aviation as they were in 2015. And because of that strategy, being having a leg in both industries, they benefited because COVID saw the growth of semicon, but also saw a slump in the aeronautical division. And therefore, even for 2020, and as you can see, 2021, when I'm going to discuss the numbers later, even with a slump in the aeronautical or aviation industry, they did do well because of their semicon industry. So I hope you're liking the content so far. I try to produce videos every once or twice a week to enable you to form better mindsets, better framework for investing in personal finance. And if you think you've benefited from this content, do consider hitting that subscribe, like, and notification bell so that you know new videos are out for you. Do share it with your friends and family so that we can all better elevate the investing society in Malaysia and beyond. As mentioned earlier, SAM Engineering's status or where they are today did not come overnight. They took certain strategic decisions way back in 2009, 2010 to realize the fruits of their labor today. Now, in 2007, when they took over LKT, one of the first things they did was divested a lot of their low-margin core products at that point of time. And 2009, I think they divested everything. They changed the financial year end till to March, where it is today. In 2010, they ventured into aerospace, and I think that only manifested itself in 2013. As you can see that 2013, there's an arrow showing a red bar column that actually says that's where they bulk up their aerospace. They ventured into semiconductor front end in 2012, and even on that year, they were also impacted by the Thai floods, right? Now, as I mentioned earlier, both the aeronautical, aviation industry, and semicon, they're both cyclical. And I feel Sam was pretty smart because once they diversify or having a strong footing in both industries, either way, they could actually buffer the impact of the downturn of any one of these industries. And it shows, you see, in 2016, 452 million, out of that 54% actually came from aerospace and 46% actually came from equipment. So they're already kind of like half and half. And this actually prepared them, because of the manufacturing capacity, the experience, this actually prepared them for the impact of COVID, where the aviation industry took a sharp downturn. And ironically, the semiconductor industry took a sharp upturn, and they could redeploy whatever unutilized capacity, manufacturing as well as labor capacity that they have from the aviation industry, and redeploy them into electronics. So, for those of you who may not be familiar with precision manufacturing, a lot of these equipment can be retooled. Not everything, but most of it can be retooled. But most importantly is the labor force or the workforce that they have. Precision manufacturing, for both industries, there are a lot of similarities, and that's why they could easily redeploy their labor or their workforce into either one of these two industries, whichever demands more. And as you can see, 2022, if it wasn't because of the effects of COVID in 2021, I was pretty sure they could hit their 1 billion mark in financial year 2021. But nevertheless, I think they're not here to look at business on a short-term basis. They've always been very long-term. And I think this transformation effects graph really highlights the long game that they are trying to play and moving forward, right? What are the prospects of the company moving forward, which I'll cover very briefly. So even the management of SAM Engineering actually said when the two stars are aligned. Now, you see, when aerospace came down, now it's picking up because of the recovery of COVID, and equipment is just gone bonkers. Now, remember, semiconductor is also very cyclical. So once, let's just say there is a supply and demand equilibrium, and we see oversupply of the semiconductor industry, hopefully that the aviation or aerospace industry can actually buffer up whatever that is being lost in the equipment business for SAM. So what does SAM Engineering's future look like? They're really investing ahead for capacity growth. Their Thailand plant, phase 1 has begun operations in October 2021. And their phase 2, they target to have mass production in 2023, which is about a year and a half from now. Once completed, the total floor space for SAM Thailand is going to be 180,000 square feet. And the CEO himself has mentioned that going forward, SAM Thailand would contribute roughly about 40% of their revenue and also capacity for the semiconductor industry going forward. So for me, that gets me very excited, because Thailand has, ironically, a lot of favorable government policies that encourage investments. They provide a lot of tax breaks, incentives that allow. I was just talking to a glove molder, a manufacturer of the glove molds, and they were telling me that why they set up in Thailand was because of all these business-friendly incentives that the Thai government actually sets out for them. Therefore, definitely there's risk, because I think Thailand, if you look back a few years ago, they suffered from a massive flood. A lot of the manufacturers there were badly affected, but I guess you can't have it all. You do need to weigh, any company does need to weigh all the options available when they start up a new manufacturing base. This is actually the forecast from CGS-CIMB on the revenue growth from financial year 2022 to 2025. They're expecting in the financial year 2025, SAM to have about 1.17 billion from equipment and 1.17 billion, correct, and 480 million from the aerospace division. So cumulatively should be about 1.6 to 1.7 billion in terms of revenue for financial year 2025. Now, in terms of revenue percentage segmentation, 71% from equipment and 29% from aerospace. But more importantly is this: for us as investors, when we're buying into a company, one of the rough or relative valuations that we use, methods that we use, is actually this thing called PE. And for SAM Engineering, their average net margins for a business is anywhere between 8 to 10%. And if we be a little bit pessimistic, at a 8% revenue for 8% net profit margin for financial year 2025, 1.6 billion, you roughly get about 120 to 130 million in terms of net profit. So if you take an average PE of, they're trading at an average PE of about 30 today, you can figure out roughly where they will be selling in terms of market cap in 2025. That is if market actually realizes this. And at a PE of 30, while I argue that it's still a little bit on the high side, I would say that it does warrant some sort of a valuation in that nature if they do prove themselves to be able to execute over the next 3 years. Because both industries they're in are high growth industries, industries that I don't foresee what do you call it, a stagnation other than, you know, black swan events like COVID. And I do foresee them being able to execute well based on their track record. So look, going forward, I do believe that, you know, one of the indicators, two of the indicators that we will need to observe as investors is that whether they are actually growing their capacity and hitting their margin numbers. By doing that, I think they are probably in steady hands right now. The board of directors are very well industry veterans, I would say, and they have proven themselves time and time again. There are definitely risks. I guess one of the biggest risks is another COVID-like event. But the other risk is also this. I think market volatility will definitely be a major factor going forward, with so much at stake on various value chain disruptions. I think SAM by no means is immune to all this. And I think for us as investors, sizing of our portfolio accordingly based on understanding this cyclical risk, this volatility risk, will actually help us, you know, weather any downturn that will be thrown at us going forward. But again, I guess when you are an investor, you are not in the driver's seat. You have to rely a lot on the operators of the business, and they have proven to be great operators over this timely period. And I do root for their success. You know, I'm an investor, as you said, but by no means this is a buy or sell call. And I do hope you do your own due diligence before investing in this company. So I'll see you in the next video, and you know, let me know in the comments, what do you think? Do you disagree with whatever I think? Are there any blind spot that I missed out as risk factors? And if you were to invest, what do you think would be a fair PE valuation for this company? And I'll see you in the next video, guys. Stay tuned. Bye-bye.